All right, perfect. I see people rolling in. Thank you so much for being here. We really appreciate it. Glad to see you. My name is Rochelle Scout and I'm Development Director at the NBDA. And today we are presenting Jerry Packer from Omega Accounting Solutions to give us information on the employee retention credits and how you can potentially get yours. So I'm going to go ahead and pass it over to Jerry. Thanks for being with us.
Thank you, Rochelle. I appreciate it. And thank you, everyone, for taking time out of your day to learn a little bit more about the ERC program and Omega. If you have any questions along the way, please type them in and Rochelle will read those to me at the conclusion of my slides. I am not planning on taking the full hour at all. I shouldn't take much more than 20 to 25 minutes to explain the program, and then we'll open it up to Q&A. So this is just a brief agenda here of what we're going to be covering. So let's get right into it. My name's Jerry Packer, as Rochelle was saying. I'm the Director of Business Development here at Omega Accounting Solutions. We were founded in 2007. We were founded as champions for small to mid-sized business in fractional accounting, fractional CFO, fractional controllers. We got into business intelligence using Microsoft Power BI, and then we got into government credits several years ago when we've really focused on that. Because of R&D credits, which is one of the credits we've been working on, we were uniquely positioned to address ERC when the CARES Act was established. In the past 2 years, we have grown at a staggering rate of 3,000%. That is not a typo. That is actually 3,000%. We recently, because of our growth, we recently located not far from where the headquarters of the association is. We're in Irvine, in Broadcom's 5 Point campus. We have earned the fastest growing private companies designation from the Orange County Business Journal, and Orange County Register rated us as one of the top workplaces in 2021. Also, we have an A+ rating with the Better Business Bureau, and we have 0 complaints filed. So the ERC, what is it and how did it come about? When the pandemic hit, Congress enacted the CARES Act. The CARES Act was really geared towards small to mid-sized business to help them survive the pandemic. So there was PPP and there was ERC. And in the beginning, you could only go for one of those. You had to choose. You could not go both. And about 99.9% of businesses that took action went with PPP. In the beginning of 2021, Congress amended the CARES Act and they made several changes. One of the key changes was that businesses that had taken PPP funds could now apply for ERC. Some other changes that were really significant were in 2020, the maximum number of employees that a business could have to apply for ERC was 100. In 2021, that jumped to 500. Another really big change was that a business could claim up to 50% of up to $10,000 of wages for an employee. So in 2020, what all that means is in 2020, a business could max out at $5,000 per employee. In 2021, huge jump. It went to $21,000. So there were 3 quarters of $7,000 potentially per quarter for the first 3 quarters. So combined, there is a potential of $26,000 per full-time W-2 employee. Now, what does the government consider a full-time employee? Approximately 130 hours. And there's something called aggregation, which means that if you own more than one business, that we have to add your employees together. The that is a con as far as if that puts you over the 500, if you have two businesses that total more than 500 employees. The good thing about that is if all of your businesses total less than 500 employees, if one business qualifies, all the business qualify, whether they would independently or not. One of the other amendments that was made in the CARES Act regarding ERC in the beginning of 2021 was the threshold for a decrease in revenue was dropped substantially. So let me explain how that works. So one of the paths to qualify for ERC, and one that is probably more widely known than the second path, is a decrease in revenue. So if you can show that you had a decrease of revenue of 50% or more compared to 2029 in any quarter compared to 2029, you can qualify for 2020. In 2021, all you have to show for the first 3 quarters is a 20% drop compared to 2019. So 2019 is always the baseline. So in Q1, if you show a 20% drop in revenue compared to Q1 of 2019, you can qualify for this. Now, I would imagine in your industry that a lot of businesses did not experience a drop in revenue. So this is why I think it's really important that we explain this. There's a complete another path to qualify for ERC that has absolutely nothing to do with revenue. The government terms it as full or partial suspension. I think that's very misleading. We like to refer to it as nominal disruption. So if we can prove that your business was nominally affected 10% or more by some kind of COVID order or mandate, we can qualify you regardless of revenue. So an example I love to use, it's a really simple one, is a restaurant. Restaurant shuts down its indoor dining, pivots to outdoor dining and takeout, for instance. Let's say they triple their business. A lot of people on the surface would say, well, your revenue is up, so you don't qualify. Not true, because they actually had to close their indoor dining. Their business was nominally disrupted 10% or more. So it's our job here at Omega to actually quantify that. Reasons that you might be able to qualify your business regardless of revenue would be social distancing. So you had to social distance, you had to limit capacity in your stores. You might have had supply chain interruptions due to COVID. But again, we got to tie it back to COVID or to a mandate. So I know here off the coast of California, in the port of LA and Long Beach, we had about 109 container ships that were waiting to be unloaded. They were waiting to be unloaded due to the social distancing requirements at the port. So it slowed everything down. So what we can do is we can show that historically, once it's shipped from like all of your supplies, your bikes and whatnot, or even parts, it normally, once it left its origin, it normally took X amount of weeks to get to the port and to be unloaded and to be delivered to you. Well, if we can go back and we can show and quantify that now it took twice as long or 3 times as long, that potentially could be a reason to qualify. Reduced operating hours, increased lead time for critical materials and supplies, employee retention, recruitment, training, again, because of social distancing and things like that. Also, other significant changes in key metrics and KPIs. So if we can show that there was a history of something, but because of COVID or a COVID mandate, those metrics changed, we can actually qualify you. Some common misconceptions that I hear constantly from business owners are, we don't qualify because our business, or because business was up, we don't qualify. We received PPP funds. We don't qualify. We were deemed essential and we didn't shut down. We don't qualify. All of those are not necessarily reasons that you would not qualify for ERC. So even if business was up, even if you took PPP funds, and even if you didn't shut down, you could still potentially qualify for ERC. Our process is really very, very simple. You are going to be sent a link tomorrow with a copy of this recording, and also there will be a link in there. And if you're interested in getting information, click on the link, fill out your information. One of our sales professionals will reach out and have a 10, maximum 15-minute conversation with you, learn your situation, kind of find out what you went through, and see if there's anything that we see on the surface that would immediately not qualify you for ERC. If in fact you want to proceed, we'll send you a service agreement, which we'll execute online, like we use something called PandaDoc, very much similar to DocuSign. We ask for a very small refundable retainer, typically around $750. What is our definition of refundable? Our definition is, once we go through the calculation, if we determine that you do not qualify, you get 100% of your retainer back. The reason we go through this, and I'll be very transparent, the reason we ask for a retainer is because when we didn't ask for a retainer, it made the process much more difficult. So what we really want is buy-in from the owner of the business. What we have found is we get our documents collected much quicker, we get our phone calls answered, and we get our emails responded to much quicker, because there's a lot of times that we have questions and whatnot. Sometimes it's not a black and white process. And a lot of times, especially if we're going through the nominal disruption route and not just through the calculation of revenue, we might have to do a phone interview and things like that. So what we have found is when there's buy-in and you have skin in the game, we get a lot more attention to our requests. Again, no risk. If you don't qualify, you get 100% of your retainer back. If you do qualify, we will take it off of our fee on the back end. And speaking of fees, our compensation. If you have 10 employees or more, we get 15% of the credit amount that you receive from the IRS. An example of that is, let's say we qualify you for $100,000. Our fee would be $15,000, and we would take, let's say, the $750 off of that $15,000 on the back end. You do not pay us until you receive your money from the government. If you have anywhere from 5 to 9 employees, the fee is 25% of the credit amount. Again, if you have any questions, please put them in the chat and we'll answer them. What is required in the process? Basically, we're looking for P&Ls by quarter for 2019, 20, and 21. We need payroll reports for 20 and 21. If you use a payroll service, they can provide us with all the information, or if you're doing your own books or your CPA, they can give us that information as well. If you offer health benefits to your employees, we're going to need monthly healthcare statements. If you don't offer healthcare, then we don't need any of that, obviously. Lastly, what we're going to ask for are, if you've taken PPP, we're going to ask for PPP 1 and 2 forgiveness applications. Pretty simple. We do everything. And that brings us to our responsibilities. So we'll do the document collection. We'll do the calculation. We will do an impact study. And what I mean by that is, if we are going to qualify you by nominal disruption, we actually have to, as I mentioned before, quantify the disruption to your business. And we've got to be able to tell a narrative to the government should they want to audit you somewhere down the road. We complete and file the application. We file your amended 941s. And at the end of the process, we actually give you an audit protection package. So this is where we actually give you a book report, if you will, or an executive summary that tells it explains our rationale, the calculations, the methodology, and the narrative. Again, it's all about the story and us being able to explain and prove how you qualify under the guidelines of nominal disruption. I will say that a lot of payroll providers and PEOs and even CPAs that are doing this can do the revenue test, but very few of them can actually do an impact study and do it correctly to make sure that you qualify correctly under the guidelines. If you are talking with someone else, another provider, the first question I would ask is, how long have you been doing ERC and how long have you been in business? Because there's a tremendous amount of pop-ups that are getting into the business because ERC is so big. It's 1.5 times the size of PPP. The timeline for us is anywhere from 2 to 6 weeks, depending on the complexity of the case. Once we file, the government is taking anywhere from 6 to 10 months. You might have read that the IRS is significantly backed up. There are, from what I understand and what I read recently, 10 million parcels that are unopened at the IRS. So it's taken them a long time because all of this is filed through paper. It's not electronically filed. Once we determine that you qualify, we also have some different options that we will present you with should you want to do that. So we have some funding options where we can get your money quicker. Should you want to do that, if you want to wait for the money, that's fine too. There's no pressure whatsoever. We're going to open it up to questions. Should you have any questions that I am not addressing today or something that you think about later on, my email is jerry@omega-accounting.com. Feel free to reach out and we will get back to you. But again, the best way, should you be interested, is when you get the email tomorrow, click the link and fill out your information. And again, one of our professionals will reach out to you. And there is absolutely no pressure. It's a very short conversation. If you don't want to go with it, no problem. If you do, we're happy to walk you through the process and the program. So, Rochelle, do you have any questions?
We do. So if you're all right with it, we could just get right into it.
Absolutely.
Perfect. First one, if the IRS audits and disqualifies the credit, do you take responsibility for this? And do you refund back any penalty, interest, or other costs that we incur as a result?
Well, very, very good question. First of all, let me say that we qualify about 85% of the businesses that we talk with. About 15% just don't qualify. We do work on a percentage. Obviously, we're going to try to qualify you for the most that we can under the law and under the guidelines. Should you be audited and you have to give back the money, we give back our portion of the fee. So if you have to give back half your money, we give back 50% of the fee that we charged. We do not refund penalties and interest. It's stated, and that is also stated in the contract. We're very clear about what we will cover and what we won't cover.
Next, what is the general turnaround time to get money back?
As I mentioned earlier, the general turnaround time is anywhere from 6 to 10 months from the IRS, and you will get checks in, typically you'll get checks by quarter. So let's say we qualify you for 2 quarters of 2021, you'll typically get 2 checks, one for each quarter from the IRS. So they're staggered from the IRS. And again, once we qualify you or determine that you qualify, you'll be given the opportunity to potentially qualify for some financing options should you want to go down that route.
Do we need to amend business and personal tax returns as a result of this?
I am not an accountant, and I'm not going to give you a formal answer on that, but what that's going to do is change your, it's going to reduce your labor is really what's going to happen, because this is actually a refund against labor expense for labor that you, for your employees that you employed during the pandemic. So my unofficial answer would be that yes, it would probably change the bottom line of your business and you would have to file amended taxes. But I would check with your tax preparer on that.
I think I missed how ERC credits get taken for an S Corp. Does it pass through to owners to be applied as a tax credit on their personal taxes?
Well, yes, it is going to, again, because it's going to change your K1 because, and again, talk to your CPA or your tax preparer, but since you are an S corporation and you get a K1 and that comes off of the bottom line, your bottom line is going to change when you get those checks from the IRS. Something I might add is this is not a loan. And it's not like PPP where you have to use the money that you get towards anything, any specific thing. So it doesn't have to go towards wages or anything. This is the owner's money and they are free to do with it what they like. So if they want to go on a vacation, they want to buy that Lamborghini that somebody did with PPP and got in a lot of trouble, they're more than welcome to do so with ERC.
As an owner, I'm a full-time employee. Are my wages included in the ERC?
Great question. No, they are not, nor is anyone in your family who works for the business qualify for that. So we back them out. And let me explain also, as far as backing out, if you receive PPP funds, what we do is we back that out of the equation so you don't double dip. So let's say you got, let's say, for example, that your payroll for 2021 was $500,000 and you received $100,000 in PPP that were forgiven against wages for 2021. We would then deduct that $100,000 from the $500,000. So the calculation that we would use, or the payroll we would use in the calculation, is $400,000. Now I'm oversimplifying, but I'm just trying to give an example of how we have to back out PPP so you're not double dipping, so you don't get to take advantage of that for the PPP and the ERC on the PPP money.
I think you answered this, but this person might have missed that part of it. Does it only apply to full-time employees, and how is that defined?
If you have part-time employees, not a problem. What we do is we just add them together. We aggregate their hours and we calculate them into full-time employees. So if you have 10 part-time employees, not a problem. We will then basically what we do is add up their hours and calculate how many full-time equivalents they are. Again, W-2 employees only, 1099s don't count.
We did get two questions that are kind of similar, so I'm going to ask them both. Is Omega a California CPA firm or a consulting firm? And then if you're not an accountant who is doing these submissions, is Omega Accounting a CPA firm?
Okay, great. Omega Accounting is an accounting firm. So we do accounting. We don't do taxes. We do have CPAs and attorneys on staff that are full-time employees of Omega. So they're the ones that sign off on it before we file. But we are not that's how we differ from a true CPA firm is we are an accounting firm, but we do have CPAs on staff.
Are fractional owners who are W-2 employees excluded?
Are fractional owners who are W-2 employees excluded? It depends on what. That's a tough one. Actually, it's not a tough one. I don't believe so. I don't believe that they are included. It also depends on the level of ownership, I believe, but again, if you're interested, go ahead and fill it out, and your sales professional will walk you through it, because they're actually more well-versed in that portion of it than I am. So I don't want to give the wrong answer. I believe that a fractional owner would be excluded, but I also believe that a minority. No, let me back up on that. I don't believe a fractional owner can be included in the calculation.
Okay.
So I'm going to take back that answer, Rochelle.
All right, next question. Is the qualification that's based on a percentage decline in revenue a slam dunk approach to be accepted, or is that method too open to scrutiny and might be overturned by the IRS, like the disruption method for a company that got a PPP loan forgiven?
It's pretty much, it's a slam dunk. It's a simple, I shouldn't say it's a simple calculation, because there's a lot of different things that go into it. There's also something that is called the alternative quarter method. So it's a little, so if you do a back of the napkin calculation and you don't qualify, there are ways that we can potentially qualify you through this allowed method called the alternative quarter calculation. So if the calculation comes out and it shows that you qualify, it's you qualify. There really is no question to that.
What is your success rate, and have you done other small businesses or bike shops?
That's all we do is small businesses. This is limited to companies with a maximum of 500 full-time employees. So it's all, this program is geared towards, small to mid-sized business. What was the second part of the question?
What is your success rate?
Success rate, as I said, we qualify about 85% of the business we talk to. We would like to be able to qualify 100%, but it's just not realistic. And any provider out there that says we're going to qualify all of them, I don't think I don't know if they're being 100% honest with you, because there's just no way to qualify 100% of the businesses. As far as success rates, I'm not quite sure if that's what they meant. But yeah, we qualify about 85% of the businesses we talk to.
Do you need all owners of the business to sign paperwork, or just the majority owner?
We just need the majority owner. We just need actually one owner to sign the service agreement.
I think this person wants a clarification. Have you worked with businesses that are on the smaller end, as in 5 to 10 employees, and have?
Absolutely, do it all the time.
Perfect.
All the time.
Will ERC be extended into 2022?
It will not. At least we have had no indication, and I don't believe Congress has, there's been any talk about that. I know that there are some new tax credits in the new bill that they just passed that are not tied to ERC. And that reminds me, just to let you know, that the window for this is you can file for 2020 through the end of 23, and you can file for 2021 through the end of 24.
Okay. What is the process for applying to ERC credits if a bike shop is looking to complete the process without hiring a service?
Go on the IRS website and see if you can figure it out. I mean, that's really the only thing I could suggest. Because of the nuances, it can get a little complicated. And that's why I would say it's best to use a service, a reputable service. Most CPAs don't want to do this. I would be surprised if your CPA actually called you and made you aware of the program and said, hey, we're doing this. They're busy with taxes and doing all the PPP forgiveness and whatnot. So there are CPAs out there doing it, but not a lot of them, and very few have been able to scale to handle the kind of volume that we have been able to do. So I don't know if that answers your question. It's just a matter of really trying to figure it out. I mean, I believe there are some instructions on the IRS website as far as how to go about it. I would start there, or your CPA, if they want to do it.
Do you know what percentage of your customers have been audited?
None have been audited yet. Very few have actually gotten, they haven't started auditing. And I will tell you that while we take it very seriously and we do everything by the guidelines and by the law and the regulations that were laid out in this, I just don't know how many businesses are actually going to get audited. And what I mean by that is 11 million businesses applied for ERC or for PPP, and I just don't think that the IRS has the bandwidth, even with the new hires that they are going to be doing, to really hit more than a couple percent of the businesses. But that being said, the IRS has not started auditing yet. I mean, most businesses that have applied haven't even gotten their money yet. Some that applied a year ago are just now starting to get their money. There was an article that I read in an accounting publication actually this morning that one of the watchdog agencies was saying that they've just been negligent in processing the ERC. So they're really having a hard time. So it's going to be a while until they can start auditing. They got to get the money out before they can start auditing, quite honestly.
How many ERC applications do you handle or expect to handle this year? How will an increase of cases impact your ability to process applications in a timely manner?
We, since ERC came out, we have processed over 2,500 applications. We have recovered over $500 million. We have over 100 full-time staff here in our office in Irvine, and we are continuing to scale and hire. So as I said, our process takes 2 to 6 weeks depending on the complexity, and we are going to be holding to that. That is once we get all of your documentation. That's when the clock starts, because we can't control how quickly you're going to get us the documentation.
All right, unless we get any more questions coming in the next, couple seconds here, I believe that's it for today. If anyone does have any questions that's watching the recording, or you think of it later on, I encourage you to send them to Jerry at his email address on the screen there. And anything else that you would like to let people know before we log off, Jerry?
Yeah, there's just a couple things, and Rochelle, thank you so much. And we're at 35 minutes. There are a lot of, I shouldn't say that. There are some business owners that say, I don't want any handouts from the government. I understand that feeling, but this is not a handout. This is actually a refund for wages that you paid. Number two, the amount of money you can potentially get back can be substantial. And there is absolutely no risk for looking into it. So I would, if you are at all interested or just about learning more, or you want to go through the process, I strongly suggest that you fill out the link tomorrow, or click on the link and fill out your information, and someone from our organization will reach out to you within a day. So, but my email is there. If you have any other questions, feel free to reach out. And I appreciate your time, and thank you very much. Thank you, Rochelle.
Thank you. If you have just one quick second, we have one more question that just came in.
Absolutely.
All right. Can you please repeat what you said about family members of the owner not being included?
Yes. Owners, even if they're W-2'd, are not included in the calculation, nor are family members of the owner included in the calculation. So payroll is $400,000. The owner W-2s him or herself $100,000. We have to back that $100,000. So the $300,000 is what we would use in the calculation to determine the ERC and how much you're going to actually qualify for. So we have to back out any W-2 wages of the owner or family members family members of the owner. So husband, wife, team, children of the owner, things like that, that are W-2 have to be backed out.
All right, thank you so much for your time and for the information. We will send out that form link tomorrow with the video recording to everyone who's here. If you have any questions, please reach out to us or to Jerry. And with that, we will call it. Thank you so much.
Thank you, everyone. Be well.